There's the closing bell on Wall Street, and now it's market domination overtime. Jared Blickery in a sec going to help us get us up to speed on the action from today's session. I'm going to start with where the major averages ended the day, down in a word. So let's run through it. The Dow off by 749 points, down 1.7%. The S&P down 1.7% as well. Both of them having the worst day since mid-December when the Fed had its meeting and sparked a market sell-off. The Nasdaq, the worst since late January, off by 2.2%. Now, we had this trio of economic reports that we have been talking about that came out this morning. First of all, not in chronological order, but we did have consumer confidence coming out and weakening, and in particular, the expectations for long-term inflation over 5 to 10 years ticking up to the highest level since 1995. That increase driven mostly by Democratic respondents to the survey. So an interesting portion of that, which perhaps you could, look at through a political lens. But then we also had two other reports this morning. We had existing home sales falling 5%. In part, we are still seeing high mortgage rates. And then we also saw PMIs, in particular, the service sector showing contraction. All of that equaling the drop that we saw in markets today. Jared's got a closer look at today's action. Hey, Jared.
Thank you, Julie. I'm going to take a look at the bond market here. Excellent equities market wrap up, and we'll get to the sectors in a second. Just want to point out that bonds actually dropped, bond yields dropped 8 basis points. We're now down to 4.42%, and that's off of that report, and not directly because of it, but it's interesting that it happened on the same day where we had that report of increased inflation expectations down the road. When you take the 10-year, it can be composed of inflation expectations or break-evens, and then the TIPS yield, which is the real yield. So having just spouted all that jargon, I'm going to move on real quick. Only staples and utilities finished in the green today. Tech took the brunt of the selling today. That was down 2.72%. Consumer discretionary also off pretty big, more than 2%. And so were energy and industrials. So 4 sectors out of the 11 experienced pretty steep declines. And this is in the context of a very low volatility rally that we've been having. But I would mention that we've also, let's see here. Well, it looks like I lost the interactive. So I'll tell you what, guys, I'm going to send it back to you right now.
All right, thanks so much. Well, a tough day on Wall Street as the major market gauges posted their worst day since the December Fed decision. Joining us now is Michael Cuggino, the Permanent Portfolio Family of Funds President and Portfolio Manager. So, Michael, what's your takeaway from this risk-off trading that we're seeing to end this week? And we can't forget that earlier this week we saw some records.
Yeah, good afternoon. I don't think it's really that surprising at all. And I think investors should really expect this, and maybe it goes a little bit further. You haven't had a correction in probably a year and a half, and stocks have bled up, and especially the last several months, bled up quite a bit in a variety of sectors, although clearly tech the biggest, but the broader market moved as well. And so a correction, a consolidation, a sell-off, especially in light of increasingly negative economic news or a day of bad prints, for example, not surprising at all. And I think we could see more to come if we continue to see that kind of information. On the inflation front, remember a week and a half, we got kind of let's hope it's a one-off, but inflation numbers that appear to be higher than the market expected. And that calls into question the interest rate cuts, or how many cuts going forward and how quickly, higher for longer interest rates. And let's hope that was one print. But if you start to get some more of that coupled with some of this other data, you start to begin to worry about a slowdown and a recession. So not surprising, the market's behavior this weekend today.
So are you sort of taking a more defensive posture right now, Michael?
Well, we run several strategies, but our most well-known is our asset allocation diversified strategy, permanent portfolio, which is exactly that. It's a defensive asset allocation fund that specializes in diversifying in a bunch of different asset classes, not only stocks and bonds, but also commodities, precious metals, real estate, and non-U.S. debt like Swiss sovereign debt currencies, and high-quality fixed income. So, we're prepared for this sort of a scenario in this environment. And actually, our firm expectations have been for higher for longer interest rates and stickier than expected inflation. So we're not really surprised by this. And so our asset allocation model has really factored this kind of a behavior in as part of its strategy.
There's been more talk about increasing overseas exposure, especially with valuations stretched here in the U.S. Are you encouraging your clients to look abroad, or do you prefer more domestic plays?
The way several of our assets, such as precious metals and energy and commodities, I would view as global assets anyway, even though they're priced in dollars. But in our equities and even our fixed income, we tend to focus on U.S. companies with strong international businesses. So that allows us to play sort of international markets, international growth without worrying about currency fluctuations. And so I think it is an area where investors look with the market run up. I mean, the S&P 500 based on the S&P 500 right now, based on our cut of earnings, is probably trading at about 22 times forward PE. That's rich. And when you couple that with a strong U.S. dollar move, it makes sense. You would look for areas in the stock market that have not kept up with the moves we've seen in the last year and a half, and also betting on a weaker dollar over time, and that would benefit foreign securities as well.
And turning to some of your individual picks here, I'm interested, you've got Broadcom on the list. Broadcom, which was a huge winner last year, has fallen a little bit this year. What do you think is going to be a catalyst for the stock?
Well, I mean, to some degree, after runs that some of these companies have had, you expect a consolidation and a slowdown. So we're not surprised by it. We think that semiconductors are going to continue to be strong. It's the nuts and bolts and infrastructure of a lot of where technology spend and excitement is with respect to AI and other areas. And it's not only just AI, it's data centers, it's more interactive software, application software, et cetera. So we think the chip sector is going to be strong. There's no question the valuations of some of those companies are rich. And so I think, investors, want to be looking for pullbacks where the pricing gets a little bit more reasonable. Looking at something like today, or maybe if you have another 5 or 10% down, that makes more sense. So we think longer term, those businesses are solid, but there's no question they ran up a little bit, and not surprising, they might consolidate. So in our view, it doesn't change our outlook on the stock.
Michael, thanks so much for your insights. Appreciate it.
All right. Have a good weekend.
You too. Investors also keeping an eye on what's happening with Elon Musk's moves in the federal government. The DOGE government efficiency effort could lead to a $5,000 cash rebate for taxpayers, but that may be too good to be true. Yahoo Finance's Rick Newman joins us now with more. And Rick, we've been hearing a lot about this rebate. Michael Darda, who we spoke with earlier, he called it a gimmick. What say you? Help us make sense of all this.
I don't think it's going to happen. I think Trump needs to get some good press here, and this sounds like something that might amount to some positive spin. First of all, the premise for this $5,000 rebate is that there will be $2 trillion in annual savings that DOGE is going to somehow find. The whole federal budget is $6.7 trillion. And if you found $2 trillion, you'd be having to do stuff like cut Medicare and Medicaid and Social Security, which is it's just not going to happen. Musk himself, Elon Musk, has lowered the target. His original target was $2 trillion. His target now is $500 billion. So that's just 1/4 of the number that $5,000 rebate is based on. So cut the rebate by 75%, and 5,000 is now 1,250. But budget experts don't even think Musk is going to come close to $500 billion. They think he'll be lucky to get 1/10 of that, or $50 billion. And now you're talking about what's basically a meaningless amount of money rebated to consumers. Plus, guess what happened when Joe Biden sent those famous stimmies out to everybody in 2021? Those were actually the third round of stimulus checks during COVID. We got inflation, which went all the way up to 9% in 2022. So if Trump finds he's not able to send out these $5,000 rebates, maybe it will mean he's getting lucky, because it will be one less inflationary factor in the Trump economy.
Right, and that was one of Michael Darda's objections to that as well. At the same time, we've got Howard Lutnick being sworn in as Commerce Secretary right now, and apparently one of his comments is, and he's echoed something that President Trump has been recently bringing up. He said the goal is to balance the budget. Rick, I know you've been looking at
Sorry, that's not the goal. That is not the goal.
Tell us.
If the goal were to balance the budget, we wouldn't be talking about another round of tax cuts. That is, the math is straightforward here. The tax cuts, just extending the Trump tax cuts, is going to add about $4 trillion to the national debt over a decade. Trump has another 12 or 13 tax cuts that he promised on the campaign trail. If we get all of those, it's going to add $10 trillion to the national debt. That's $1 trillion per year. These guys are not serious when they say they want to balance a budget. And by the way, here's the real tell. If they were serious, they would not be gutting the Internal Revenue Service. The IRS says there's a so-called tax gap, which is the amount that taxpayers owe but they don't pay, which could be as large as $500 billion a year or more. That's money, that's not raising taxes, that's tax money that people owe and they're trying to dodge. If you cared about the balancing the budget, you wouldn't be getting rid of the tax police who go out to find that money. You would probably be adding more tax police. So there's no evidence that these guys are remotely serious about balancing the budget. By the way, Joe Biden wasn't either.
Well, nobody has been in a long time, Rick. But on the flip side, there are some proponents of this administration's policies. I haven't heard the phrase pro-growth thrown around as much lately, but certainly in the wake of the election, that was a phrase that was front and center for the market bulls, that this administration's policies were going to be pro-growth and that the sort of budget imbalance would in part be made up for by that growth. What is that outlook looking like at present?
Yeah, I mean, so there is some. I would get away from the phrase pro-growth because you're getting into the sort of the supply side economics, which basically never work. The idea that if you just unleash businesses, they're going to generate all this growth and it's going to trickle all the way down. That basically doesn't happen. But deregulation is one place to look. I mean, that's not necessarily a bunch of smoke and mirrors. If you do deregulate, you make it easier for companies to do business, their costs go down, and that would help economic growth. Another big one here is permitting reform, which everybody talks about. It turns out it's really hard to do. So what Elon Musk is doing, just going through the bureaucracy and like taking a jackhammer and lopping off like 1/3 of every agency, that is not going to do anything to solve permitting reform. Permitting reform, it's a huge issue in energy, whether it's fossil fuel energy or green energy. It matters for both. It's the reason we can't build pipelines. We can't build new electricity connection mechanisms. Guess what? We need the federal government to get more involved and solve the problems at the state and local level, create incentives for states and cities to make those decisions faster. Housing is another one. We know there's tons of permitting issues getting more housing built. There's nothing that's coming out of Trump so far that will address that. So, deregulation will be pretty good. Tax cuts, yes, there will be some growth, but when the deficit goes up, I mean, we got a bigger corresponding problem there than we have ever had with the effect on the bond market and 10-year Treasury rates, which you've already been talking about. And I've been talking too long about all these problems, so I'm going to send it back to you guys.
We look forward to many future columns on all these issues.
I'm on a roll, but I mean, we got 4 years here.
I love it. Rick, yeah, you save a little bit. All right, thanks a lot.
See you guys.
Straight ahead, Mercado one of the standouts today in a sea of red on Wall Street. The company reporting blowout earnings, and we've got the CFO next. More market domination overtime coming up. Shares of MercadoLibre surging to a record high following strong fourth quarter results. The Latin American e-commerce and fintech giant reporting record quarterly results for revenue and for net income. Here with a closer look at the key drivers is MercadoLibre CFO Martín de los Santos. Thank you so much for being here, Martín. So obviously the stock climbing to a new record as you came out with these results. So you've got these two sides of the business, and obviously when you look at the economies in Latin America, there are a lot of cross currents going on. Where is the demand coming from, in particular on the e-commerce side of the business? Let's start there.
Hi, thank you for having me. Yes, as you said, we presented results yesterday that were very strong, closing a great 2024. This was a very special year for us because we're celebrating our 25th anniversary, and it was very strong in both sides of our ecosystem, as you mentioned. Both commerce and fintech are performing extremely well. In commerce, we reached 100 million buyers last year, growing at 24% year on year. On fintech, 61 million monthly active users, growing also at 34% year on year. And we deliver very strong financial results, as you mentioned before, as we continue to invest in logistics and strategic initiatives such as credit cards and so on. On the commerce side, as you mentioned, I think the biggest trend is people moving online. When you look at penetration of e-commerce in Latin America, continues to be very, very low in relative to the US or China or Europe. So I think that's the main driver of growth. And we, as the leading player in that, in Latin America and e-commerce in Latin America, we play a special role on moving people online. And we continue to invest in building a fulfillment infrastructure. We have the largest and more sophisticated logistic infrastructure in Latin America that enables us to deliver, for instance, the 1.8 billion packages that we delivered last year. Half of them were delivered within 24 hours. That was something that was undreamed of several years ago in Latin America. So many different things that we're doing, investing in our product, are helping us drive growth. We've seen very strong growth in Mexico and Brazil, which are the main countries where we operate, growing at 32 and 28% respectively, at a much faster rate than the market. And then we also have seen a lot of strong recovery in the second half in Argentina. So very, very satisfied with the results on the commerce side. And we can speak later about the fintech side, which is also performing very well.
And I want to follow quickly on that e-commerce, that strong growth that you're seeing. Any interesting types of consumer behavior patterns, any type of trading down? We talk a lot about these macroeconomic concerns, tariffs, inflation, anything that you're seeing there?
No, we haven't seen much of that. We've seen some effects in some of the devaluations of the currencies might affect particularly products coming into the countries from abroad, from Asia, and so on. But for the most part, we sell general merchandise. So we tend to see, as I mentioned before, I think the stronger trend is people moving online. And that's a lot stronger than any macro headwind that we might have from here and there. We've been operating in Latin America for 25 years. So we've seen a lot of ups and downs. I think the focus that we have on our product and improving the offering on our platform, the payment methods, improving the logistics, that's a lot more important to bring volume through MercadoLibre than actual macro factors.
I'd like to ask about the fintech side of the business too, and credit quality in particular. When you look at markets like Brazil, where we're looking at a potential rising rate environment, are you seeing a decrease in credit quality? Have you tightened your standards at all? What are you seeing?
We haven't seen any deterioration of our credit on our book. In fact, our book continued to grow this year at a very rapid pace. Our overall credit book grew by 74%. Our credit card grew by 120% year on year. So very strong growth with NPLs under control and very healthy spreads. In fact, we improved margins quarter on quarter. Having said that, we have taken a little bit more cautious stance given the macro conditions. We have a lot of flexibility on our credit products since the duration of our product is very short. So we can adjust very rapidly to deteriorating market conditions if they happen. But we haven't seen them so far on our own book.
So I want to pick up on that point because you did reiterate your strategy of continuing to invest in the business to drive that long-term growth. But how are you navigating some of those potential cost pressures? And you mentioned some possible macroeconomic deterioration. I mentioned those tariff headwinds. Anything that you guys are doing to safeguard your business for the future?
Yeah, I think that for the most part, what we continue to do is to invest and to innovate and to improve the user experience. Our Net Promoter Score is at all-time high. We continue to grow at a faster rate than the market, so we continue to gain market share. And the investments that we make are on the core of our business, right? Logistics, we invest on our product. We have 18,000 developers that are constantly looking at the user experience and trying to improve the service that we provide to our users. And then we are also investing on the fintech side on building our credit card portfolio. We have a very profitable credit business. The credit card requires investment because it takes a longer cycle to become profitable in a given cohort. And we're investing behind that. We manage credit with very, very conservative way. We grow very fast because we operate in a platform that's growing very fast, but we are very cautious in terms of risk management. But again, I reiterate what I said before. Macro, 1 percentage point more of interest rate, a little more inflation, doesn't affect the stronger trend of people moving online, which is something that we're trying to capture. We have a tremendous opportunity going forward on commerce as well as fintech. If you look at the fintech opportunity, penetration of credit in Latin America is very, very low. Only 13% of people in Mexico have a credit card. So the opportunity to include financially all those people is enormous, and this is where we're trying to capture at MercadoLibre.
Martín, finally, I did want to ask you about if there is any effect from potential tariffs whether it is proposed 25% tariffs on Mexico, but also the sort of reciprocal tariffs that President Trump is talking about. Does that have any effect on your business in terms of the flow of goods?
It's marginal. We don't sell any products into the US, so that way it doesn't affect us. Most of the products, I would say 95% of the products are sold within each country. So these are local marketplaces. And we do have a cross-border business coming in from Asia into Mexico in particular. And more recently, last year, we opened a fulfillment center in Texas, selling into Mexico and Argentina. So if there were tariffs, it might be affected that small part of the business, but it's low single-digit part of our business. It's not really that relevant. So I think that the effects on tariff for us directly is not going to be, it won't have much impact on our business.
And MercadoLibre shares, they are up about 32% so far this year. Martin, thank you so much. Appreciate it.
Thank you for having me. Have a nice weekend.
Well, 2 more companies are rolling back DEI initiatives in the wake of Donald Trump's return to the White House. Joining us now with more is Yahoo Finance's Alexis Keenan. So, Alexis, you've been following this very, very closely. A lot of updates rolling out when it comes to corporate America and their stance on DEI. What's the latest here?
Yeah, so the latest are 2 more major U.S. firms, Citigroup and PepsiCo, joining some other major companies that have rolled back DEI initiatives. Citibank's announcement came about its changes in a memo from CEO Jane Fraser. PepsiCo, for its part, published a memo yesterday from Ramon Laguarta. Both companies saying that they're going to end what they call aspirational workplace representation goals. For Citigroup's part, they're going to stop requiring that there be a diverse group in the pool of job applicants, or candidates, I should say, and also the interviewers at the company that interview the candidates. That no longer has to be diverse. That was a requirement at the company. They're also going to rename their DEI talent management team, and they're going to call it instead the talent management and engagement team. Pepsi also said for its part that it's no longer going to employ a DEI officer. That job is going away. And it's also going to expand its supplier base, the company said. So like you mentioned there, we have been tracking at Yahoo Finance the best we can these major companies that are abandoning their DEI policies. There's Walmart, Target, Goldman Sachs, Disney, Google, Meta, McDonald's, Boeing. That's just to name some of them. You can see some of them there on your screen. Many of these executives of these companies pointing to the decision-making process based on a 2023 Supreme Court decision that outlawed race-based admissions in admitting students to universities, and also to an executive order that was issued by President Trump ordering federal agencies to, quote, combat illegal private sector DEI. So one of the anti-DEI advocates that's been very aggressive in this area, Robbie Starbuck, he claims that he was responsible for the rollbacks at PepsiCo. Also, not necessarily seeing a lot of stock moves in the wake of these decisions, but what we are seeing are lawsuits. Target already the subject of a couple lawsuits allegedly for hiring or not being transparent about the risks of doing away with these DEI policies or keeping them on the other hand. So Target seeing it from both sides. So definitely somewhat of a risk there, and these CEOs and these executives having to kind of tiptoe around the new policies that are rolling out, both from the government as well as from the Supreme Court.
Alexis, thank you so much for tracking all of this for us.
You bet.
Time now for what to watch next week. We'll be getting Berkshire Hathaway CEO Warren Buffett's annual shareholder letter on Saturday. The letter coming out in conjunction with the company's annual report and fourth quarter earnings, this year marking Buffett's 60th at the helm of Berkshire. Investors will be looking closely for any commentary on a variety of topics, including investment opportunities and when he may pass the baton to his designated successor, Greg Abel.
On Wednesday, the moment markets have been waiting for, NVIDIA earnings are coming. The AI juggernaut is announcing full year and fourth quarter results after the close. And after a steep sell-off following the emergence of DeepSeek last month, NVIDIA is clawing back some of those losses. Yahoo Finance will have special coverage of all things NVIDIA on Wednesday. Coverage begins at 4 p.m. Eastern.
And finally, we'll be getting a key piece of economic data on Friday with personal consumption expenditures. Economists expect overall PCE to hold steady at 0.3% on a month-over-month basis, while core PCE ticks up to 0.3%.
And that'll do it for today's Market Domination Overtime. Be sure to come back Monday at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market moving stories so you can get ahead of the themes affecting your money. Stay tuned.